The chair now recognizes himself for 5 minutes for questioning. And I'll start with Ms. Lee and the data privacy issue. The financial services industry, as I said in my opening statement, is already a very highly regulated sector when it comes to privacy. However, since GLBA was enacted, we have seen a proliferation of innovation in the financial services space, requiring the need to update and modernize that law. As we look to make those updates, deciding on the proper enforcement mechanism is extremely important. Ms. Lee, do you have an opinion on what enforcement mechanism would be best for the financial services industry? And I say that with reference to Mr. Reuter's view about private right of action being not the right answer.
Well, thank you, Chairman Barr. And you know, it is something that we have been in discussions with. We know this is a relatively new draft, and so what we would love to do is come back. We know that there is trade-offs on either side. We know that there's a private right to action. We know there's state attorney general's actions. There's federal enforcements and other things. And we would love to work with this committee on talking through kind of the pros and the consequences of various different enforcement acts. But we believe that this, however we modernize it, that it does need to have some type of strong enforcement mechanism to ensure that the consumer's data is protected for all means.
Mr. Reuter, would a private right of action affect innovation? Would it open the door for frivolous lawsuits from trial lawyers?
Chairman Barr, I think it would open up for frivolous lawsuits. The thing I would point to is banks have been in the data industry for a long time, and GLBA has been around for 20 years. And I think if you look at our track record, it's really good. And so as a result, I think something that's very important is preemption to state law, because we operate, I have customers in all 50 states, even though I'm headquartered in Colorado. And then two, I think having the prudential regulators being the one that's overseeing enforcement has proven to work well. As banks, we have everything that we could ever possibly know about a customer, but we're in the trust business. And the way we make money is we gather deposits and we make loans. And so I think we've acted very responsibly with the data, and GLBA has stood this test of time.
As I mentioned in my opening statement, since the financial crisis, de novo charter formation has significantly slowed. Between 2010 and 2019, fewer than 10 new banks opened on average per year. And burdensome regulations and other roadblocks have reduced de novo community bank formation, denying individuals and business access to banking services. This is one of the reasons why we have the necessity for these mergers. My bill, the Promoting Access to Capital and Underbanked Communities Act, is relatively straightforward, allowing for a phase-in of capital for de novo institutions, including some provisions targeted towards underserved rural areas and several other common sense provisions to promote bank access in unbanked communities. Mr. Burlaw, can you please discuss the impact of bank consolidation in rural communities, and will increased de novo bank formation help solve the problem?
I don't know that de novo bank, that consolidation itself is necessarily a bad thing. That, as Mr. Knight said, that sometimes mergers can provide more efficiencies, more services to consumers. What my issue is with consolidation, driven by the cost of regulation, and also in the case of Bird and Hand and other banks, some of these communities were never really adequately served, and that's what you really need de novo banks for, and that's the good that your bill and Congressman Auchincloss's bill would do as far as phased-in capital, studying the situation for de novo and what are the barriers and other things.
Well, back to Mr. Reuter and Mr. Knight, perhaps. I believe that community banks are what sets our country apart from many other financial services markets around the world. If you go to Europe, you have large banks, and if you go other parts of the world, it's large institutions. We don't have, they don't have community financial institutions like we do, and that is essential to new business formation and entrepreneurship. Relationship banking, lending to someone based on their character, risk-taking. That creates the dynamism of our economy that sets us apart and helps U.S. competitiveness, in my view. Mr. Reuter, in your testimony, you note that my bill that would spur more de novo bank formation, that would increase competition, expand banking access for small businesses. Can you elaborate on that, and do you agree with that argument of competitiveness with small community banks.
I strongly agree with that argument. You know, we are a great example of a community bank. We have, as I mentioned in my opening comments, 300 officers that serve on 2 or 3 nonprofits each. It's not just the nonprofits that benefit, it's all the businesses that are associated with those nonprofits. We raised $53 million for over 3,000 nonprofits in 24 hours. Having a group of people on the ground, 300 officers living in the communities, using the businesses, there's no better way to have a pulse on what that community needs. So we're all for more competition. Bring it on.
Thank you. My time has expired, and the chair